The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawkbox Europe. I'm Sylvia Morrow with Karen Show, and here are your headlines this Tuesday morning. Europe's Stoxx 600 hits a record intraday high, with equities edging higher as investors eye today's GDP print out of the United States.
Novo Nordisk shares bounce as the drug maker secures US approval for a pill version of its Wegovy weight loss medication. Tensions between the US and Denmark as President Trump appoints a new envoy to help acquire Greenland.
If you take a look at Greenland, you look up and down the coast, you have Russian and Chinese ships all over the place. We need it for national security. We have to have it.
Welcome to our US viewers if you are just joining us. So we've been debating this morning as to whether we do have a Santa Claus rally turning up, a melt up on markets. Again, we've seen it stateside, another session that's linked positive, particularly around the tech stocks. And you saw the semiconductor stocks that were again up to the tune of about 1%. That is the Vanex Semiconductor. You saw FANG stocks up about 0.5%. So really concentrated around that AI story, where there's been a little bit of a bubble fear that's emerged in recent weeks. But does that just set the scene for some sort of year-end activity where investors are going back in buying the dip?
Ultimately, I would still say that there's a little bit of a mixed sentiment out there. If you think about yesterday and today's performance, at this hour, we do have European equities tracking higher, but the numbers are still modest. We're still seeing quite a lot of upside for healthcare, but is this a story just for one sector specifically? And to your point around AI, one of our guests earlier suggesting that you might want to play healthcare as a defensive approach here to a potential AI bubble as well.
But the redeployment he was talking about, I thought was fascinating, because you're asking whether it was a tactical play if you are concerned about an AI bubble. He was saying, well, the reality is if the market regroups and you see the AI story actually have some traction, then these defensives that are being sought into year end might actually go nowhere next year. So again, very difficult trade, I think, for those playing their strategy for 2026. But I think on the macro side, it's going to be worthwhile checking out the GDP numbers today. Much delayed data, again, what it says about just how intact that US story is into year end. Now, let's just gear up for markets and the action we're seeing. What has been the case in Europe, some of the gains just not sticking on these boards. So real lack of conviction, again, around the European markets in this final stretch towards Christmas. The French market that was flat, it's now flipped weaker, down more than 0.1%. Italian names, again, the real standout trade in Europe for 2025. It's giving back faint territory. We're seeing very little range now on the DAX. It was up a little bit more than this, barely in positive territory. And the UK market was 0.1%. So not a lot of movement at this hour. In terms of the sectors, this is the areas that are showing green. It's healthcare. Sylvia and I have been talking at length about this sector. There's some positivity that has come through the negotiations with the White House, another 9 pharmaceutical companies this week, just stripping back another layer of uncertainty around the US policy. The other factors here, we mentioned it in the headlines, for the likes of Novo Nordisk coming up with a pill version, much easier than an injection around its weight loss drug that has been now given approval by the FDA stateside. So some of that movement today, arguably because of the heavyweight in the basket. Utilities, real estate, telecoms rounding out the improvers. Again, very defensive tilt to that basket. To some of the losers, where we're seeing that underperformance coming through the European boards this morning. Banks, highly sought, huge amount of appetite. And again, an area that a lot of the fund managers like going into next year. It is giving back about 1/3%. Construction materials, and we had a great chat this morning about one of the guests who's looking at this as a playbook around any progress around the war in Ukraine. That sector, though, just giving back territory. Resources too. Again, another high flyer into year end, down 0.1%. Autos are sliding as well. US futures, the early picture for those US markets looks to be just flat now at this hour. It was inclined positive. So again, as we march towards the US Open, it does feel as though we're lacking some direction. It's a heavy day on the US data front. Third quarter GDP is expected to show the US economy grew 3.3%, bolstered by strong consumer spending and solid business investment, though the government shutdown and inflation are now likely to have weighed on the overall numbers. PCE prices, keep in mind that is the Fed's favoured measure of inflationary pressures, are expected to come in higher on the quarter. Meanwhile, consumer confidence is expected to recover marginally in December. They remain lacklustre on continued cost of living concerns. And finally, October and November industrial production figures and October durable goods orders are expected to shed light on the health of the US economy and ongoing tariff pressures. Marco Valli joins us now, chief economist at UniCredit. Marco, just fleshed out a whole bunch of data that the market's going to be looking at. Just as you've read in on this delayed data and take a look at how the US economy is faring so far, do you think we're settling in for a slightly quieter period, a lower growth phase from here for the US economy?
No, I think growth in the US is going to remain quite solid. I think that we have a strong AI-related capex cycle, which we see extending into 2026. And we also see ongoing solid performance in terms of consumer spending, although here, a note of caution because we know it's not homogeneous. We know it's driven by the wealthy part of the population. So this has a lot to do with the wealth effects. But one thing that we are looking very closely at is the fiscal push that we think will be quite strong in the first few months of 2026. And this, I think, is going to be adding fuel to an economic cycle, which I think from an underlying perspective is solid. So our forecast for GDP growth next year is 2%. We don't expect a huge improvement in terms of labor market because AI capex will come with relatively limited job creation. But all in all, this is a good environment for growth and a great environment for corporate profits.
Well, Marco, as you talk about the upside potential, one of your views, though, is that higher tariffs are here to stay. And to the point around that, there still seems to be some damage stemming from the tariffs as we count down to the midterms. Farmers that were given some assistance, a $12 billion aid package recently. A lot of the industry leaders were saying, look, that does not cover the cost for some of the farmers that have been hard hit, particularly the soybean farmers. If we consider the consumer that is counting the cost of everyday goods, and Trump was also talking about some sort of appeasement with a $2,000 handout. Do you think that there are cracks appearing in the US economy thanks to the tariffs that may have to be counteracted next year?
I think the US economy is fundamentally solid, but tariffs are definitely a headwind, right? I mean, look at what was the narrative behind Trump's decision to impose tariff. He thought that exporters, so European exporter, Asian exporter, would absorb much of the tariff, but this has not really played out. So either it's a tax on company profit that absorb the tariffs on their margin, or it's a tax on the final consumers, or it's a mix of both, right? Which seems quite plausible assumption. And I don't think that all the pass-through of tariffs has been completed yet. So I think that there is still more effect in the pipeline. What we see is some attempt by the US administration to try to mitigate the impact of tariffs here and there with the targeted intervention and actions. But all in all, tariffs are here to stay. And I think net, they're a damaging factor for the US economy. Yes, you get a bit of a tailwind when it comes to government revenues, right? But is it really worth? I don't think. We have to really think of the tariff not so much as a tool to rebalance the trade deficit, but as a tool to put pressure on US competitors, whether that's China, whether that's the US, whether that's Europe. So this is really, I think, the real nature of tariff and why we think that tariffs are here to stay despite they are net negative on the US economy.
So, Marco, give us a little bit more color in terms of your expectations for the US-China trade relationship in 2026. And given what you just said, to what extent do you think this is going to be perhaps the biggest risk for the new year?
It's a risk, but I think it's going to be a risk that stays in the background, right? I think it's going to create noise. I don't think that protectionist measures are over. I think that this is a truce. This is not the end of the trade war between the US and China. So we can expect more protection measures on both sides. I see this as a sort of a risk in the background, but not something that will disrupt economic activity and financial markets in 2026. And the reason I say this is that China has shown with all the rare earth restrictions that they have leverage, right? And I think that the US has understood this. And so I don't think that they are going to be clashing with China head on, because they understand they have leverage and they know that they can disrupt the global economy if they impose a serious restriction on rare earth. So my view is that the level of trade and political uncertainty will remain structurally elevated in 26 and most likely beyond, but we will not see an escalation like the one that we have seen in the aftermath of Liberation Day. If it's that true, then I think that the macro fundamentals will play out and will be driving the economy and financial markets for next year.
So if not the US-China trade relationship, what do you think is therefore the biggest risk in 2026?
Yeah, I mean, there are plenty of risks, right? But the one thing I think is important to understand, we are looking at a global economy which has a sound balance sheets and relatively sound fundamental. So for sure, in a way, politics and geopolitics is and remains the major risk. But when you have to allocate your money, when you have to make your investment decision, do you allocate based on your baseline scenario or based on the many risks that they can materialize? So that's why I think we cannot definitely say that there are no risks outside. It's a very, very dangerous world, right? But fundamentally, we are looking at solid balance sheets. Fundamentally, we are looking at, yes, pockets on overvaluation when it comes to the AI world, right? But we don't like to play the AI world mainly on the big names. Like like to play the underlying technology, those businesses that will be able to benefit the most from the cascading of this technology through as the technology percolates through the real economy. And we like to play in the AI team mainly when it comes to the enablers and those that will make this technology sustainable and available to all. And that means construction for data center, that means energy production, that means energy transport, that means cooling down of data centers. All these industrials, all these sectors, I think, are going to be an important bet in terms of markets for 2026.
Marco, in your research, you're talking about ring fencing of trade and technology by the US and China. I want to get to the consequences for China because it is investing a huge amount of money into the technology trade, trying to make market share gains. Wall Street Journal reporting on this today, talking about the state wasting colossal amounts of money. That is the phrasing that is used, saying on the surface it might be making inroads into technology, but under the surface effectively portraying it as a hot mess, that there are cutbacks on hirings, wages are depressed, home prices down 17% since the pandemic, mounting government debt trying to fund this build out of technology. And in some cases, one particular county, one province, where wages for some officials, for government workers, are just simply not being paid because of those mounting debts. What do you make of just how significant it will be for China to conquer international markets with this technology, trying to pay some of its debts back home?
Yeah, I mean, the tech sector in China, I think, is an important diversifying opportunity when we look at the AI story in general. Because while we don't like particularly the underlying macro narrative in China, what we see is that there's ongoing government efforts in putting money in this sector, because obviously we are speaking about a huge tech competition with the US. So when we are looking at China, the way we are approaching it in terms of portfolio decision is the following. We see a macro story which is weak, right? We have an unbalanced growth model, a lot of investment, a lot on exports, and very little on private consumption. And we are not seeing a turnaround there because the politics is not there for it to be a different story in terms of consumption or in terms of consumption growth. And then we look at what China is doing in terms of supporting the tech sector, right? And I think that they're doing this very seriously, right? Obviously, with a lot of debt. But I mean, let's be frank, right? Debt is all over the place globally, right? So we cannot be too picky here. So they're doing this with a lot of debt, a lot of resources poured into the sectors, and they're making big progress. So this is why, in terms of AI story, we like the AI story. But again, we don't like to take exposures to some of the big names where valuation can be quite high. And we think that the China tech can represent a source of diversification as we move in 2026 if we want to avoid focusing too much and too strongly on the US market, then China does offer an opportunity. But again, it's mainly for tech because we know that they're putting a lot of emphasis there, but we don't like the underlying macro story in China because it's still too unbalanced. It doesn't seem like it's going to be changing anytime soon.
So several factors at play there, Marco. In the meantime, thank you so much for joining us this morning. Marco Valli, Chief Economist at UniCredit. And coming up on the show, Novo Nordisk tops the Stoxx 600 as it receives FDA approval for a key drug. We'll have all the details for you right after this break.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back to the show, everyone. Now, the weight loss drugs market reached new heights in 2025 as the industry continues to experience massive growth. But 2026 is set to mark a new stage in the life cycle of GLP-1s. I dug into the outlook for the pharma sector. As we head into 2026, global pharma companies are firmly focused on developments in the rapidly growing weight loss drug market. UBS estimates that GLP-1 drugs will see total sales of $130 billion in 2030, with the obesity treatment segment expected to grow to 34 million patients by the end of the decade. That's up from 4.4 million in 2024. So far, the two leading players in the market have been Novo Nordisk's Wegovy and Eli Lilly's Mounjaro. But 2026 looks set to mark a fresh phase of development for the sector. Novo Nordisk shares have fallen sharply this year as the company lost ground in the crucial US market. And the company faces headwinds next year as the patents behind Wegovy expire in several key emerging markets. But the Danish pharma giant is hoping for a turnaround as it cuts prices of its Wegovy injections and looks to roll out its new Wegovy pill. We spoke to Novo Nordisk CEO about the importance of those upcoming weight loss pills.
It's the first time that you have a pill where the efficacy of it is on par with the injectable. Usually you have to basically go for either convenience or efficacy when you're discussing pills versus injection. Not in this case. Wegovy in a pill basically will have the same efficacy as its injectable counterpart. That's really exciting. It's also super exciting for me that will be the first GLP-1 product that will be made in US by Americans for Americans through the whole value chain of it.
Eli Lilly is also developing new products. New injectables from the company have entered late-stage trials, and it says an experimental weight loss pill is a candidate for speedy approval from US regulators. And we could have a new European player in the weight loss race. The Swiss drug maker Roche advanced one of its experimental obesity drugs to a late-stage trial earlier this year, and executives say they want to become a top 3 player in the market with competitive products by the end of this decade. Now, Roche has worked to acquire candidate drugs by buying up smaller companies developing promising treatments, and we have seen the weight loss arms race fuel a slew of M&A. Novo Nordisk, for instance, tried to do a deal of its own, missing out to Pfizer in a $10 billion bidding war for the drug developer Metsera, and handing the US player a route into the lucrative market as well. The weight loss sector has shaken up the global pharma industry and looks set to shape the outlook in the year ahead. And speaking of weight loss drugs, Novo Nordisk has secured the FDA approval for its weight loss pill, which will be sold under the brand name Wegovy and use the same active ingredient, semaglutide. Novo says it expects to launch the pill early next year with a starting dose of 1.5 milligrams available for $149 a month. Dave Moore, the company's executive VP for U.S. operations, told CNBC that having an oral option opens up the market. And HSBC's head of healthcare equity research, that's Rajesh Kumar, gave his thoughts on the news amid Novo's escalating competition with Eli Lilly.
Two market leaders developing an oral segment. And if they can develop the segment into a weight loss maintenance category where you have an induction of weight loss with an injectable and then maintain the patient's weight loss using an oral, that could be quite interesting. The uptake is what everyone is waiting for. It's wait and watch. I think exciting news that FDA approval has come through, and it will be the launch trajectory which the street will want to see that Novo executes on that in 2026. Right. Efficacy-wise, Novo's product on the clinical trials at least looks better. Tolerability looks quite attractive compared to Orfo. There's only one difference. Lilly's drug orforglipron, basically you don't have any food and water restriction. It's a true small molecule. So, in terms of prescribing to patients who are, say, on a hypertension pill, it's easier for a lot of GPs. In terms of patients' compliance, it might be easier. But bear in mind, the tolerability in the trial was not great. So Novo actually might have an edge, and it will entirely depend on how they execute it.
And Novo Nordisk this morning, it is the top gainer when you look at European equity performance. We're up almost 8% at this hour. So it is no doubt a welcome development in Denmark. If you think about what has happened to Novo Nordisk this year, they've had several episodes of problems throughout 2025. They had to announce a change in leadership at one point. They announced also a cost-cutting program that is going to lead to several job losses as well. So the announcement from the FDA is the good news as we approach the year end. We knew, however, that the expectation was that this approval was likely to come before the year end. So the question mark here is the outlook for 2026 and whether this announcement on a weight loss pill will be enough to reinvigorate the fortunes here for Novo Nordisk.
Let me say something. I don't know if this is sensible or not, but it struck me that the launch from the company is going to be January. They're manufacturing now. They're hoping it'll be available from January. What happens in January? Well, all those New Year's resolutions about losing weight, being in better shape, start to come to the mix. So instead of getting the gym membership, some simply going to sign up for this pill on a monthly basis. I mean, is there something in the timing around the seasonals here? And as you point to the share price performance of Novo Nordisk, it has been a woeful performer this year from what has been the darling of stock markets in Europe in recent years to a real underperformer because of the market share. This innovation around the pill is seen as instrumental for it to reclaim some of that market share. Pricing, will it matter? I think it's part of the mix at this point, the 149 comparing to the 346 from Eli Lilly on a monthly basis. Before that is also then at a cheaper price, but initially it will be the cheapest option out there in the marketplace. The other point is we know just how tolerated some of these injections have been and whether that stretches across to the pill category, how effective and how they are tolerated by some of the consumers. That clearly matters from here. So those are a couple of the factors I think that will come into the mix next year.
And when it comes to the competition with Eli Lilly, let's not forget that the expectation is also that they will be getting approval for their own weight loss pill around March time. So Novo Nordisk also had the head start when it came to the injection in the first place. We're talking about perhaps 2-3 months here. Is that enough for them to gain further ground in the United States? We know how that has actually been perhaps the point that has put further pressure on the stock this year, the lack of performance or the underperformance in the US market. So let's see what will happen there. No doubt that this is a very intense market in terms of competition as well. Other players trying to play a role here as well. So let's see how this story will unfold. No doubt that the announcement is important today for Novo Nordisk, but there's still a lot of question marks about the outlook for the stock.
Consumer preferences come into the mix. I mean, some consumers do not like needles. They would much prefer having a pill. So if they can convince some of the users to flip across to a pill version straight away before Eli Lilly gets going, then it might make a difference, and they may not be willing to change the medication if they see success with that pill. So an early mover advantage could count here. I think what was interesting, the amount of other companies that have tried to come up with an obesity drug and have not been able to do so. I mean, it's a fairly long list of experienced players. Pfizer, Amgen, Roche, all scrapping versions of a weight loss pill. Reminds me a little bit of the COVID jabs, where everybody tried to produce one, but not everybody was successful.
Absolutely. I would also just make one final point here when it comes to the outlook for Novo Nordisk. Several analysts also questioning what else they have in the pipeline. Because yes, they're quite strong when it comes to weight loss drugs, when it comes to diabetes, of course, but they had issues this year with the CagriSema. That was meant to be a solution for them also in the long run, and the data was not supportive of that. So also question marks here about what other alternatives, what other products Novo Nordisk can put in the market.
Yeah. Now, we haven't even put into the conversation athleisure wear sales and the rest of the industry that benefits on the back of weight loss measures, what it means in terms of fewer food purchases too. So it's something the market is watching, not just in the pharma space.